this session because currently forensic audit is very discussed topic in the market, and we are also looking for that key how we will get opportunity for the same. So I hand over to the session to the Sushil sir. Please carry on.
Thank you so much, madam, and thank you, Vishal Sawan sir and Rajesh Agarwal sir. Uh, am I audible?
Yes, sir. You are.
Thank you. So, I mean, over the next maybe 1 hour, 15 minutes, 1 hour, 20 minutes, I'll in a way speak about what is forensic audit and what are the kind of opportunities. But more importantly, I'll also speak about what to do if you actually end up getting a forensic audit. Because see, I mean, forensic audit is something which is actually new, but at the same point of time, it's like they say, old wine in a new bottle. So especially the seniors here would say, अरे ये क्या अभी नया है, अभी ऐसा तो पहले था नहीं था, ऐसा कुछ नहीं है. Essentially, even before what people used to do, we used to call it investigations. Nowadays, we have coined a very nice word for that. In most cases, we call it a forensic audit. So I think forensic audit per se is not something entirely new. Now, when I try to approach this topic, I have two ways of going ahead. One is I can actually keep on throwing so many technical terms at you that at the end of it, you might feel that I know a lot. But at the end of the day, if you try to think to yourself, what did you get? You might feel that you have not got anything. The second approach is what I would rather focus on is to say, if you tomorrow end up getting a forensic audit, what is it that you should do so that it will actually help you deliver that assignment for the client? So I think finally, at the end of the day, what matters is that what is it that you can take away from this lecture? And I would rather say that I would focus it in such a way that if tomorrow you end up getting a forensic audit, how would you typically approach it? And what is it that you can actually take away? In the end, I can also, and I'm completely aware of the fact that, I mean, in a place like even sometimes in Mumbai, but definitely in Latur, the possibility of getting forensic audits on a daily basis is going to be less. And accordingly, what is also important is to really look at this subject and also identify the techniques here in which you can probably find useful or probably use, not only in terms of the normal audits that you do, the statutory or the internal audits that you do, but sometimes also, for example, now there is a bank branch audit season. So in the bank branch audit also, what are the elements of forensic audit that you can do? Which are the minimum tests, or I can say, which are the minimum aspects that you can easily cover so that the possibility of you missing out a probable NPA is reduced to the maximum extent. So I think these are techniques, because I think if you look at the broader accounting world in that sense, what is happening today is that if you look at auditing also, I mean, our auditing profession has been designed or was designed 70 years back at a time when the primary aspect was that not everyone could, I mean, at that point of time, the books of accounts were written by hand. And also the volume was such that everything could not be checked. But now we are in an age where the books of accounts are completely computerized. And now there are tools available which actually can run programs and test everything that is there in the books of account. So the days of complete auditing and continuous auditing are the things that are going to come into the future. And from that perspective, many of the things that we talk about in terms of essentially forensic audit is going to be pertinent, and going forward, it will not only remain only as an area by itself, but certain techniques of it would be expected by people or by the society at large, is that we as chartered accountants will actually use these techniques as a part of undertaking any kind of statutory or internal audit. So I think with that background, I will just share the screen. I hope you can see my screen. Okay, so fundamentally, what is forensic audit? Now, I think this is where, again, like I said at the beginning, people who are aged or people who are seniors in the profession would say, okay, is this something new? So the answer is no, it is not something new. It is only what you used to call as investigations or agreed upon procedures in the past. Now, a different word is used for that, that is forensic audit. Obviously, there are certain differences between a pure play investigation and a forensic audit, but we'll deal with it as we go ahead. Fundamentally, there is no specific definition of the word forensic audit. In fact, if you look at the standards which have been issued by the institute, they in a way try to say that we should not use the word forensic audit. It talks about forensic accounting and investigation standards, which have been issued last year by the Digital Accounting and Assurance Board, the DAAB of the institute. Now, however, the word forensic audit is now so popular and everyone uses it in such a way that I think I prefer to use the word forensic audit, because that is how people in a way tend to also agree in terms of what it means. Because otherwise, if I keep on using the word forensic accounting and investigation, essentially what will people say is that yes, effectively you're talking of the forensic audit only. So what is forensic audit? I think in common parlance, it is simply the gathering of evidence to establish any wrongdoing or fraud. So if you look at this, there are three aspects to it. One is that there is obviously it is a gathering of evidence. Now, when we say evidence, it would mean evidence as far as the Indian Evidence Act is concerned. And as chartered accountants, I would definitely request everyone who is interested in understanding this topic in a bit more detail to actually also go through the Indian Evidence Act, because it also helps us understand it in a different perspective. Because evidence otherwise is something that we have always been using colloquially or as a part of our audit in terms of what we call as evidence in the standards on auditing. But what is evidence is sometimes a bit different when it comes to a court of law. The second leg of it is obviously establishing any wrongdoing or fraud. So I think an essential part of a forensic audit is also to understand what is a fraud, and which I will be talking about in a bit detail as we go ahead. So as I said, forensic audit is most commonly used in the detection of fraud. So I think detection means that the fraud has actually happened, and forensic audit is essentially going to bring about that evidence onto the fore, or bring the evidence in front of everyone that yes, there is a fraud which has happened, and that is how it has been detected. Forensic audit as an opportunity, or I think the principles of forensic audit or certain work that we do, is nowadays also used in terms of the prevention of fraud. So I think that is definitely an opportunity for everyone to practice, that wherever there is a possibility of less controls being there, at such places, chartered accountants can also provide services to their clients, which essentially would help them create control systems through which the possibility of fraud reduces substantially. Before we go into the main aspect about what is a forensic audit, I would also speak a bit about why is this topic important. So if you look at the report, that is RBI's annual report, which is RBI's report on trend and progress of banking in India, and if you look at the fraud numbers, these are huge numbers. So if you look at 2021, FY21, the total bank frauds as far as advances were concerned was 1,37,000 crores. Now 1,37,000 crores of frauds in the banking sector. You can look at this amount in the context of our total country's tax revenue, which is around 20 lakh crores. So I think this is a very, very big area in terms of what we face, and definitely it is an important area to study. But if you look at the report in more detail, there are certain interesting facets that come out. First is that 99% frauds by value pertain to advances. Now, let us just stop here. What it means is that for whatever we keep on talking about in terms of technology, cyber risk, all of that is absolutely critical. But when we today as chartered accountants approach an issue, we need to know that as of today, 99% frauds happen in terms of value, where the bank has actually given money to a borrower and the borrower actually does not pay. It becomes an NPA, at which point of time a forensic audit is undertaken, and the forensic audit typically establishes that the money has actually been siphoned off. So most of the frauds even today are with respect to money which is given by the banker through a process, and the borrower in a way siphons it out. More advance based frauds are actually seen in the public sector than in the private sector banks. Secondly, more card or internet banking transaction frauds or instances happen in the private sector. So if you look at the split, as far as advances relevant frauds are concerned, they are more in the public sector banks. But card or internet banking transaction frauds are very, very high as far as the private sector banks are concerned. Now, frankly, the reason for it could also be obvious, that as far as transaction frauds, be it with respect to internet or card systems are concerned, private sector banks are way ahead in terms of their customers using credit cards, debit cards, as well as internet banking, as compared to maybe the overall volume as far as the public sector banks are concerned. And accordingly, there could be more frauds happening in the private sector from a card or internet banking perspective. Which helps us come to the next question about what is actually a fraud. Now, this is a very interesting definition or very interesting context to look at, because each one, and we are now used to just reading the newspapers in the morning and saying कि अरे यहाँ पे ये fraud हो गया, इथे हा fraud झाला. But at the same point of time, when it comes to a legal process, it is important to understand what exactly is a fraud. And when I was trying to study it, I realized that there is no one definition. In fact, there are many definitions of the word fraud. So one of the definitions is given in the explanation to section 447 in the Companies Act. So there is a Companies Act definition. There is the word fraud is also used in the RBI Master Circular on fraud, which is called the Fraud Classification and Reporting in Banking Sector, issued by the DBS in 2015. Then there is an internal RBI working group. There is a report of that on information security, which talks about the word fraud. There is a different definition as far as the Insurance Act is concerned. The word fraud is not directly defined in the Criminal Procedure Code or the IPC, but the word fraudulently and dishonestly are the words which are typically used in Criminal Procedure Code and the Indian Penal Code. And then we have section 17 of the Indian Contract Act, which all of us have, maybe this is the first law that we in a way studied when we passed our CA foundation exam. And I think that also defines the word fraud. And if you look at the expanse, you have the Indian Contract Act, which was framed in 1872, which talks about the word fraud. And then there is a Companies Act 2013, which still feels the need to again define the word fraud. So I think fundamentally what is common is that the word fraud is also going to be something which is always be going to be contextual, because as economies grow, as civilizations improve, and if different kind of things come to the fore, the possibility of different kinds of frauds being unearthed is also going to be high. And accordingly, the definition of the word fraud is always going to be a very ever evolving topic. And obviously, lastly, there is SA 240, which is the auditor's responsibility relating to fraud in audit of financial statements, which is a standard of auditing, which has been issued by the ICAI. Out of these, I will not really go into the definition of fraud from all these angles, because I think here we are not really looking at a legal interpretation of the word fraud. We need to move towards forensic audit. But I would definitely touch upon two definitions, one from the Companies Act and secondly from the RBI perspective. From a Companies Act perspective, fraud is defined in relation to the affairs of a company to include any act, any omission, any concealment of a fact, or any abuse of position committed by any person or any other person with the connivance in any manner, with the intent to deceive, to gain undue advantage from, or to injure the interests of the company, shareholders, creditors, and whether or not there is a wrongful gain or a wrongful loss. So if you look at this definition, you will realize that the definition of fraud as far as Companies Act is concerned is a very wide definition. It includes all types of acts of commission as well as omission, and whether or not there is a wrongful gain or a wrongful loss to anyone. And it does not even talk only with respect to the company, it talks with respect to the interests of the company, its shareholders, creditors, or any other person. Now, if you look at all the definitions of frauds under various acts, you will find that the Companies Act definition is the most comprehensive. That is it's the biggest definition of the word fraud. And the logic for it is also quite obvious. If you look at all the acts that we have discussed till now, be it the Insurance Act, the Contract Act, or any other thing, this is the latest law which has been passed by Parliament. So this is 2013. And accordingly, over a period of time, depending on what all the government must have learned in terms of possibilities of what has been happening in the banking sector or in various companies, all those aspects have been incorporated in the definition of this word fraud. Why I'm again going to speak so much here is because tomorrow, if you are asked to evaluate or if you are asked to do a forensic audit, typically it would be with respect to a company. most probably it will be with respect to a company, or it could be a cooperative society, or it could be a trust or some such other legal entity. Now, in that case, for tomorrow, for that whatever you call as fraud to stand in a court of law, it is also important for you to understand that if it is a company, what could be called a fraud, because only then there is a forensic audit, and only then there is a evidence to gather information about some wrongdoing, and that can stand tomorrow in a court of law. The other definition or the other circular, which is actually very pertinent and which everyone gets affected by, and while all of us even doing any kind of bank audit, concurrent audits, or obviously forensic audits, need to definitely go through this circular, is this RBI's 1st July 2015 circular on fraud classification and reporting in the banking sector. Now, if you carefully go through the entire circular, the circular talks about what are the classification of frauds, what is red flagging, when is the fraud to be reported, when is the complaint to be made. It talks about all the procedure part of it. But if you really look at the definition closely, you will realize that RBI also is not really defining the word fraud at all. So what RBI talks about in the master circular is that it gives 7 different classifications of frauds which are primarily dependent on the Indian Penal Code. Now, which are those? So first is misappropriation and criminal breach of trust. Second is fraudulent encashment through forged instruments, manipulation of books through fictitious accounts or conversion of property. Unauthorized credit facilities extended for reward. Fourth is negligence and cash shortages. Fifth is cheating and forgery. Sixth is irregularities in foreign exchange transactions. And seventh is more a residual section, which talks about any other type of fraud not coming under the specific heads. Now, this is very critical for an auditor, or especially a forensic auditor, to understand, for the simple reason that what happens is when you actually undertake a forensic audit, the person who appoints you, especially a bank, always tells you that your report has to be conclusive. So when you say conclusive, the bank insists that the report should state whether it is a fraud or it is not a fraud. And that is where the definition of fraud becomes critical. So that was the definition under Companies Act. The second is, what is the definition as far as the RBI is concerned? So RBI talks about this in the Master Circular on 1st July 2015 on fraud classification and reporting. Now, if you go through each of these 7 sections or each of these 7 types of frauds, you will realize that there are only very few types where you can actually categorize anything that you have understood into any of them. So for example, misappropriation and criminal breach of trust. So what would that be? That would be that somebody, which is a borrower, has actually got money from the bank for a particular purpose. And then instead of using it for that particular purpose, they have decided to use it for something else. So that is where there is a misappropriation or criminal breach of trust. Secondly, there could be a manipulation of the books of accounts. So something which is there in your books is different from what you have submitted to the bank, or you have passed a certain set of entries to give a very, very different picture of your books of accounts than what the reality is. Now, if you look at the balance 3, 4, 5, and 6, these are very, very specific things, and which would rarely be found as part of actually doing a forensic audit. So essentially 1 and 2 are the most important parts which one has to be very mindful about when doing a forensic audit. Which brings us to the next question about the different types of fraud. So what are the different types of frauds? And I think this is something which all of you would have probably faced or probably seen or would have studied at different stages of your accounting career. But broadly, there are 3 different sets of frauds. So one is a type of fraud which is called as asset misappropriation. So somebody who is at the custody of an asset typically maybe siphons out the asset or misutilizes it, misappropriates it. That is a broad category. Second type of fraud is essentially corruption. Now, what is corruption? Corruption would mean that if I am given a fiduciary responsibility with respect to a particular area, I do not use that fiduciary duty properly and use that position to my advantage against some kind of a gratification, that is a corruption. And third is essentially financial statement frauds. So financial misstatements. So where I am in a position of actually preparing the books of accounts and I do not account for certain entries properly, which results into misstated financials for the company or for the entity, and because of which the bank is tempted to give loans or some outside investor is tempted to invest in the company. So coming specifically to asset misappropriation, one of the most common type of frauds which we see at a very retail level is skimming. Now, typically, if you go to a mall and if you pay against some food that you buy, at that point of time, if you do not take a receipt, there is every possibility that the person on the counter might just keep or pocket the cash into his or her, will just pocket the cash without accounting it as far as the books of accounts are concerned. So I think that's a very, very basic kind of a fraud, which is skimming, where the money is taken out even before it is accounted for itself. So I think at that point of time, if there is no control, this money will never be accounted. Second is cash larceny, which is essentially stealing cash. But I think what we have always learned as teaming and leading, where essentially money would be kept in, it would be inserted into the system. But at any point of time, if you do a reconciliation, if you actually count the cash, it would always be short, because whatever is the cash balance is essentially taken up by the relevant person to his or her row, or is misutilized somewhere. Fake bills, I need not really speak more about what is fake bills, but essentially we all know that there could be bills which are actually completely fake, or which are bills which do not have any kind of a commercial undertaking or a commercial backing to that. Ghost employees is where again there are employees for whom salaries are paid, but while it is shown on the books of account that employees are actually paid salaries, in reality the money is actually paid to people who are non-existent, and this could happen in both ways, either payment in cash or sometimes payment by check, where the employee names are given, but against that the bank accounts are completely different, so the money might be completely moving on to different people, whereas on paper some different people are shown as employees. Expense reimbursement schemes, again I think people putting false expenditure for reimbursement, and at the same point of time also misutilizing the approval systems in various organizations. So for example, if a particular person has a limit up to 1 lakh rupees, and above that if somebody else is supposed to approve, then making sure that all bills or all expense reimbursements come in such a way that it is only a person who is in a way able to approve all. So I think there could be many types in that. Inventory misuse, again, person who is in charge of the inventory actually takes away the inventory without accounting for it, or just sells it in the open market, and there could be a gap between the inventory in the books versus the inventory what is physically available. So I think if you look at all these are asset misappropriation type of frauds. One of the obvious things that will also be clear here is that the person who is actually an employee of that particular entity is in most cases going to do this kind of a fraud, because this is a fraud which is committed typically by an employee on the company or the entity who employs it. So I think that is where this kind of an asset misappropriation fraud would happen. The second category of fraud, like I explained, is bribery, which is corruption. So again, bribery is a type of fraud. Kickbacks obviously is where you would get some kind of a gratification in return for making a payment to a supplier or a vendor. Bid rigging is also a category where maybe the technical criteria are sometimes rigged, or sometimes there is some mis thing done in the financial bid also, in terms of ensuring that only a particular person gets the contract. Money laundering is again, I think, essentially a part of the whole racket where money, and I'll spend some more time on what is money laundering and how does it actually happen and why it is such a big risk. As far as financial statements or financial misstatements are concerned, there could be various frauds as a part of that. One is fictitious revenue booking. So where there is actually no sale, still you show a sale, or the substance of the agreement could be different, but it is accounted for in a different manner. For example, the substance of the agreement could be that I am sending the material to you, but it is on a returnable basis. But at the same point of time, I account it as sale instead of showing it as consignment. And there could be many types of fictitious revenue booking. So I think that is definitely a financial misstatement. Non-provision of various losses. So if there are any losses which are actually incurred, the losses are not provided for, which makes sure that certain debtors may not be recoverable, but there is no provision made against that, because of which your debtors are high. Your debtors being high also has a good impact on your drawing power, because of which you are able to maintain a particular limit as far as the bank is concerned. Incorrect asset valuations, again, I think critical at the time of going for a bank sanction, or generally also. And nowadays, in case of listed companies with Ind AS, most things require fair valuation. So in such kind of cases, again, this is a big risk, whether the asset values are actually correct or not, because it is not necessarily cost. Many assets are also in a way accounted for at fair value. Accordingly, incorrect asset valuation makes a direct difference to the profitability of the particular company. Siphoning of bank loans naturally is where again you show something which is not correct, and accordingly against that bank gives a facility and which is used to in a way siphon out and take money out. Shifting of profit to shell companies, again I think a situation where profits are moved from company to a company depending on essentially the tax structure, and also in terms of also movement of funds to people who need not really be receiving that. Going into a bit detail about inflating sales, that is fictitious revenue booking. One is what is dummy sales. Now, dummy sales could either be in the form of high C sales or circular transactions. Now, not all high C sales are obviously dummy. I mean, some of them could be genuine, some of them could be real high C sales also. But if you're looking at a company while doing a forensic audit, or even as a part of the bank when you're evaluating a proposal as a part of bank branch audit, this aspect we have to be very careful about what is the nature of business of the company. If it is high C sales, and if a majority of transactions are happening only in the high Cs, because in the high Cs, the sale does not really happen through any actual transfer of goods. It happens only through an assignment of the bill of entry. And obviously there is no tax impact thereon because it is purely outside the territorial waters of the country. So it is in the high seas. And accordingly, this is very, very susceptible to fraud because it is only essentially entries that move. And I think that is where our forensic auditor has to be very careful about the genuineness of this transaction. Sale and leaseback transactions are again not technically frauds, but these are typically, like for example, sale and leaseback as a function is very, very common as far as say the airline industry is concerned. So a particular airline might purchase a lot of aircraft, and then typically no airline company actually purchases and keeps the aircraft onto their books of accounts. Most cases they are sold to some financing company, which then leases it back to them over a period of time. So for example, if you have an aircraft for say 100 rupees, and if you sell it to a 150, and then there is only a leasing or a financing transaction whereby you in a way take it back on lease for the next 20 years, then accounting today allows you to account for that 50 rupees as sale or profit on sale of asset. And accordingly, these transactions could essentially be used to manipulate the sales or the total profitability for a particular year. So I think it again does not mean that every sale and leaseback transaction is a fraud, but one has to be very careful in terms of understanding the substance behind the transaction. Year-end sales is what I think we have definitely learned as a part of our auditing background in terms of looking at the cutoffs to see whether a current year sale is not pushed into the next year. Sale on return basis is what I spoke about, where the sale could actually be on a return basis, but it is accounted for sale in the year in which the materials are dispatched, and it is shown as a sales return when the material comes back. So I think this also to some extent could be used by various borrowers as far as the banking loans are concerned. For the simple reason again that most banks would follow a very, very straight system of a drawing power, that is a maximum permissible bank finance calculation, which is based on your debtors, creditors, inventory, and also sometimes a percentage of the sale amount. So I think this is something which again we need to know as forensic auditors of what is the reason or what would be the primary drivers for a company to show or not to show certain numbers in the books. As far as funds movements are concerned, there could be loans or advances which are given to related, unrelated companies. Now, if you see in many cases over a period of time, the definition of related parties has also increased substantially. So more and more parties have come within the definition of related parties. But still, it is very much possible that there could be a lot of transactions which are purely outside the typical use of the word related parties. But these could essentially be companies or entities which are completely controlled by the same promoters. And accordingly, any advances or loans to such kind of parties needs to be very carefully evaluated. Then there could be purchases or sales to overseas affiliated entities. So affiliated entities means those entities in a foreign country which are again controlled by the particular person or by the company. And purchases or sales to such affiliated entities could mean both. It could mean shifting of money from India to abroad, or it could be bringing back money into our country. Loans against pledge of shares in case of listed companies, again, I think something which SEBI has plugged over a period of time. But this could also be the case where the shares in a listed company by the promoter are pledged to a large extent, and there is a lender who pays or who gives a loan against the pledge of shares, and the money is effectively siphoned out. I spoke about money laundering. So essentially, what is money laundering? I think it is about breaking it into certain small parts, then placing it, layering it, and reintroducing it back into the system. So I think fundamentally it is about breaking cash into smaller deposits to avoid suspicion and reporting. That is called the structuring part of it. This typically would be undertaken through maybe cash smuggling or depositing in jurisdictions with less banking oversight, as well as those jurisdictions with higher banking secrecy. And I think we all know of countries which actually you can go and you can even deposit $1 lakh in cash or even withdraw $1 lakh, and nobody will ask you a question or even a KYC document. So there are still countries like that. And those are the countries which over a period of time, thankfully now most other countries are keeping restrictions on dealing with such kind of entities or countries which have that kind of a banking background. Typically, money laundering would happen in cash intensive businesses because it is about cash. So it could be about hotels, restaurants, retail stores. Now casinos, obviously in India, it's not permitted, but in certain places in India also you have casinos, and petrol pumps. So these are places where typically there is a lot of cash which is generated. So it is possible for fraudsters to really show that money is actually earned through some kind of a business activity. And that is how money laundering would start. It could also happen through trade over invoicing. So it would happen in terms of over invoicing purchases, where you show a higher value to a purchase than what it actually should be paid for. So that would mean money which goes out of the country. And at the same point of time, there could be under invoicing sales to related parties based in foreign jurisdiction. So you have an entity in Mumbai or in anywhere in India, selling it to an entity in Dubai or Singapore, and that Dubai or Singapore entity selling to somewhere in Africa. And that way effectively the price at which you transfer, you can decide whether to effectively shift profits or money from India to Dubai or Singapore. So I think there are companies which or fraudsters who might be doing these kind of activities where you're under invoicing sales to a related party in a foreign jurisdiction, and effectively this would not be a trade at all. Sometimes it is just entries where the money moves. Shell companies or coca companies, I think as chartered accountants, there is no need to sort of get into the details of what is that. One only interesting thing is 2-3 years back on the Shell company issue, the MCA had started this in a big way. The challenge is there is no definition of the word shell company at all. And accordingly, I think this is just a general word, but the specifics of it, I think at each court case, this is being handled in a different manner. Round tripping as a part of money laundering is where you move money outside the country. It could be deposited in bank accounts in a tax haven where there is no tax, and then it is routed through various countries, and then the same money would come into our country as FDI. It could be through promissory participatory notes which are still allowed in India, or it could be some other mechanism, but essentially it is movement of money from outside, from the country to outside, and the same money in a way coming back as FDI. Bank capture, again, a very different kind of thing. In my personal experience, I have seen this partially at one place, and which was very, very shocking, but it is a complete gaming of the system, where what people do is that they deposit a lot of money in a bank. I mean, naturally, it is a cooperative bank because for any public sector or private sector bank, the size of the banks are such where this is otherwise impossible. So this was a particular cooperative bank where so much money was deposited that effectively the person depositing the money uh, sort of got control or was able to maybe appoint at least 50% of the directors on the bank, based on which whatever money in a way came into the bank, was given as a loan to a set of related parties, which again I said was not really related in that sense, but which was in a way controlled by the same person. And the structure itself was that the money was never supposed to come back. So the money went out. There was a huge NPA because of which the bank went in a mess. But at the same point of time, the if you look at the structure used was that they used the bank itself in between to do this transaction, where the source of the money, because a bank came in between, it was very difficult for anyone to link the person to whom the money was given with the person who had provided the capital. So I think that is another use, or I would say a very dangerous use of the bank capture as a tool of money laundering. If you look at the money laundering aspect, I mean, there is a financial intelligence unit in India, and it also functions. So for example, if you deposit more than 5 lakh rupees in a bank account in any month, or if there are any suspicious transactions which are undertaken, or if there are any certain cash transactions are undertaken, then the bank has to report those kind of data to the financial intelligence unit. So if you look at these 2019-20 statistics, there were around 5.4 lakh suspicious transactions, 1.55 crore cash transaction reports. So these are not the amounts or values. These are the number of filings which have been done by various banks in our country in that 1 year. And if you can look at this, you just realize the extent of this particular issue as far as the country is concerned. And the FIU report clearly says that because of which there was a detection of unaccounted income to the extent of 1,860 crores. Now, what it also means for us as auditors is because this would be some kind of an entity which would have been audited by one of us. And accordingly, this is also a risk for us if tomorrow, because of a particular raid or because of these kind of filings, there is a huge chunk of unaccounted income which gets disclosed, which was not disclosed or which was not accounted for as income in the books of accounts. ACFE is the Association of Certified Fraud Examiners. Every year they release what is called as a report to the nations. Now it talks of various graphs. Why I've tried to show this graph is for a very interesting part, is that it talks about the different types of frauds and how much does it really cost. And we looked at these three categories: asset misappropriation, corruption, and financial statement fraud. And if you look at it, it is apparent that while asset misappropriation constitutes a higher percent of cases, the actual loss there is many a times less. But if you look at financial statements fraud, the number of times it happens is less, but every time the impact is huge. And I think the answer to this and the reason to it is very obvious, is that financial statement frauds are typically undertaken by the owners themselves, or people who are in a fiduciary capacity, or what we technically call from an institute standard perspective, those charged with governance are the ones who would typically be undertaking a financial statement fraud. And accordingly, the chances of that resulting into a loss are very high. One very humbling part of the whole process of forensic audit, because see, I mean, you will always find people like me talking a lot about forensic audit, but a very interesting analysis which really gets thrown up is given on the slide here. It says that 43% of frauds are detected by whistleblowers using various means like fraud hotline, emails, or through unsigned letters sent through post. So what it means is almost half the frauds which get detected are detected because somebody who was a part of the scheme, or somebody who would have seen it from inside but who wants to really report something has actually reported it. So it is not any forensic audit or anything per se. It is many cases, at least half the cases, it is somebody who says ki this is exactly what has happened. And then in most cases, that is actually checked by somebody to say whether that has actually happened or not. So I think this perspective is important for anyone to know while doing a forensic audit. At the same point of time, if you see, the next best is internal audit. So I think that also highlights the importance of internal audit. It also highlights the changing role of internal audit, which is no longer remaining, or which is no longer linked to only checking certain items, but also having a macro perspective about the business per se to be able to provide proper services to the client. And lastly, I think contrary to popular belief, frauds may be affecting private companies more than government and public companies. Now, this is what a survey says. It cannot really be challenged, or there is no data to support it beyond this. But again, it could be logical for the simple reason is that in most public sector companies, at least in India, you have a lot of other agencies which are always looking into. So for example, if it is a state government, you have the Anti-Corruption Bureau. If it is a central government entity, you have the CBI and you have ED across the board. So you have the Central Vigilance Commission. So there are created entities which continuously look into these aspects, and accordingly, the possibility of detection of frauds is also going to be high as far as public sector companies are concerned. Going specifically now to the next stage where we'll talk about what is forensic audit and how does it exactly differ from a statutory audit. So as far as the objective is concerned, in a statutory audit, I think it is governed by the laws of the land in India. At the same point of time, it is also driven by the standards of the institute. So statutory audit says that we are here to express an opinion as to the true and fair presentation. So I think that's broadly the lookout as far as statutory audit is concerned. In case of forensic audit, you are there with a specific purpose to identify and uncover any wrongdoing. So it is not in terms of a general understanding of what is really there. As far as forensic audit is concerned, there is a specific purpose assignment to identify and uncover any wrongdoing. From a mindset perspective, in case of statutory audit, it is based on the premise that you need to trust, but you would rather verify. But in case of forensic audit, you presuppose a wrongdoing. So in statutory audit, you actually do not presuppose that there is a fraud, but obviously in a forensic audit, you are appointed only because there is a allegation or a suspicion of fraud. So you need to presuppose that there is a fraud. As far as techniques are concerned, in case of statutory audit, it is substantive and compliance based. So it is sample based, whereas in case of forensic audit, it is very investigative, it is substantive, or there is in-depth checking. Now, the important difference between the two is in case of statutory audit, you would do small items of samples across everything. But in case of forensic audit, you will try and create an hypothesis and go deep down into it to identify whether that is something actually happening or not. Verification of items of financial statements. In a statutory audit, you typically rely on a management certificate or a management representation. Forensic audit, obviously, you cannot rely on the management certificate or representation because otherwise there is no need to have you in the first place. So there is an independent verification where there is misappropriation. That is exactly what is expected from you, and that is what you need to do. As far as off-balance sheet items are concerned, in a statutory audit, the focus is on identification and disclosure. Whereas in forensic audit, if you see overall, the focus is on propriety and impact. So it is not about whether the disclosure has been properly done or not. In a forensic audit, the effective focus is where has the money gone and whether that has been effectively captured or not. As far as adverse findings are concerned, in a statutory audit, you would typically give a negative opinion, a disclaimer, or a modified opinion. Whereas in case of forensic audit, there will be a legal determination of a fraud. Because see, in a forensic audit, and I'll cover this when we go ahead about report writing, but it is not just enough to say, yeah, we found a lot of frauds. It is important to actually give evidence with respect to a fraud. And many a times the client would also insist that you identify who are the people who are behind that fraud. So coming specifically now to the different types of forensic audit assignments, and this is where I think these are the opportunities that one can look for as far as this particular area is concerned. So one is areas where frauds carried out by employees against their own organizations. And I think like Chanakya has said that till the time there are going to be civilizations, till that point of time, there are going to be frauds. So I think whichever city you are based in or whichever kind of clients you serve, this risk is always going to be there. And accordingly, if you are able to identify and study this area properly, like I said, you can help the clients in terms of both detection of frauds as well as in terms of prevention of frauds by putting in certain systems in place. The biggest thing that we see everywhere, and from a newspaper perspective also, we keep on reading it every day about different kind of frauds that happen in the banking system. So these are NPA cases where money lent by bankers is not repaid by borrowers. So I think typically these are appointments which are done by the various banks in terms of identifying whether actual fraud has happened, because of which the account has become NPA or because of which the money is not really repaid back. Ponzi schemes, I think we all know what Ponzi schemes are, where basically one person's money is collected to repay somebody else's deposit. These are all deposit collecting schemes by various names, essentially playing on the greed of people by giving them or alluring them into very high returns, 16%, 18%, 24% returns per year. And because of which people keep on, and a lot of unsuspecting and many a times, funnily, a lot of very, very highly educated people also keep on investing money in these schemes. But again, analyzing this for the investigative agency or wherever this happens is a great opportunity. Disproportionate asset cases, very, very typical as far as public servants are concerned, where again, this is a very specialized thing, but this is where again forensic audits assignments are handed out. Terrorism related money trail cases, transaction audit under IBC. I think nowadays under the Insolvency and Bankruptcy Code, for 2 years before the date of insolvency, the resolution professional has to have a clarity of thought about any of the transactions, whether they are preferential, whether they are fraudulent, extortionate, or undervalued. And I think for this, most cases, a chartered accountant who is typically appointed to look at the transaction audit as far as the Indian Insolvency and Bankruptcy Code is concerned. And I think this is something which is very relevant because IBC cases are actually happening across the country. It is not only in, say, Mumbai or any of the metropolitan areas. Forensic due diligence, again, it's a combination of certain tools which are due diligence and others, where effectively certain elements of forensic analysis are used as a part of undertaking any due diligence assignment. And the last thing that I spoke about, which I've been speaking before, is fraud risk assessment. So if you look at anything before this, all these others are effectively about detecting a fraud where there is a problem, and then a forensic auditor is brought in to identify exactly what is the problem. Whereas in case of fraud risk assessment, it is essentially a situation where you use a forensic auditor to prevent a fraud or to put into place systems where the company knows in advance what are the problems that could arise, and depending on that, what is the situations or what are the things that can be put in place. Next is, I said at the beginning again that most importantly, as a part of my presentation, I would rather speak on what is it that you can do if you actually end up getting a forensic audit. So from that perspective, I will actually speak about what are the different skills which are involved in undertaking a forensic audit. Now, the first skill which I feel, after doing a lot of forensic audits, I feel the most important skill is actually accounting knowledge. Because let's understand one thing, fundamentally in today's age, any fraud that anyone would undertake would be with a monetary perspective. It will be to steal or it will be to take away some kind of funds, which is where at least we will be involved. There could be any other type of crime, but essentially as any kind of forensic audit in that perspective will be undertaken where there is some kind of a monetary loss. Now, anything as far as money is concerned, if it is lost, it is going to move through the banking system and it will be stuck or it will be somewhere hidden into some books of accounts somewhere. So I think from that perspective, accounting knowledge and combined with it certain basic banking knowledge is an absolute prerequisite as far as forensic audit is concerned. Till now, if you have realized, I have been talking about forensic audit for the last 45 minutes, but I have not used any term with respect to technology, this, that, and this tool, that tool. Is it that we don't use it? Is it that this is not required? No, it's absolutely required. It is absolutely required. We use that in a big way. I purposely did not speak about a lot of technology as a part of forensic audit for one simple thing. Is because I believe that any technology is only as good as what we know about it. Like for example, if you want to drive a car, what you need to really understand is how to drive a car. It is okay if you don't really understand how does the actual car work, including the powertrain and the combustion engine. If you don't understand that, that's fine. Similarly, while doing forensic audit, you need to know which are the tools and what to do with those tools, because I think that is something which actually is more important rather than trying to get into the tools itself, because that's not really your job. Because for that, again, I mean, as a part of forensic audit, many a times there are different specialized people who might be engineers, who might be data forensic auditors, whose help you would require to take. For example, nowadays, one of the most common things that we do when you do a forensic audit is, for example, to take the mobile phone and the laptop of the accused. If if we are in a situation where that is available to us. Now, in such kind of cases, there are specific kind of tools which are used based on which the entire WhatsApps within a mobile can be created, and which the entire trail of it is available in Excel in the form of a conversation. So I think those kind of tools are available, but there are specialists to do that. But that again, you need to use, be it data analytics or any kind of such tools, depending on the situation, and secondly, depending on the availability of that particular tool, or I would say, sorry, availability of that particular evidence to you. Because like getting somebody's mobile, like for example, if you're doing a forensic audit on behalf of a bank, and if you go to a promoter and say, okay, you give me your mobile phone and your laptop, I want to do a digital forensic, 9 out of 10 places, they will just drive you away and saying you first you get a court order. So I think these are things which are the practical aspects of it. But that's why I think data analytics is also an important tool as far as forensic audit is concerned, because most cases it is about trying to understand where money has gone. Creating and testing hypothesis. See, fundamentally, if you have got the drain of what I'm trying to speak, you would have realized that I am not talking about when you do a forensic audit, it can't be like, okay, I'll look at all areas and then I'll try and look at each of that. Because see, in most cases, we have talked about financial statement fraud, and which is where most of the problems would be as far as we are concerned. Now there we need to think both as auditors as well as smart accountants as well as also sometimes fraudsters, that if I want to actually do something like this, what will I try and do? And accordingly, ability to think like what a fraudster would think will help us to create and test a particular hypothesis which will actually be important for us. Sound knowledge of laws, like I said at the beginning, basic accounting and banking laws are absolutely important. But anyone wanting to look at other broader areas, and maybe people who are interested in studying these topics in general, I would definitely recommend that PMLA, Prevention of Money Laundering Act, or in Maharashtra, we have the Maharashtra Protection of Interest of Depositors Act, Prevention of Corruption Act, and definitely even other laws like the IPC, CPC, CRPC, and evidence. I think these laws are what one should definitely read through uh, while undertaking a forensic audit. Because what we talk about colloquially, what comes in the newspapers as fraud, cannot stand in the court of law as a fraud. There has to be a lot of evidence, and I'll give an example of that towards the end. But there is a lot of evidence that needs to be built around it to be able to stand in a court of law. Most important in my view, as far as the skill is concerned, is understanding the business. Because if you understand the business, you would definitely understand whether the business would require that kind of funds. So for example, uh, if you're doing a forensic audit on behalf of a bank in case of a borrower, depending on the nature of the business, you should be able to understand whether the borrower actually did even require that kind of working capital. So he has gone to the bank saying, I need so much working capital finance, but does the business really, is the business structured in a way to require that much working capital? So I think when you understand the business, you know what is the kind of business or what is the kind of manufacture, trade or service is that business providing, which are the kind of customers, suppliers, which are the kind of skills involved. So I think it is very important to understand this, because based on it, a lot of other factors are based. All this, I think most importantly, it is common sense, but like they said, common sense is not so common. And accordingly, I think fundamentally, a lot of what I have said can be fit within what we call generally as common sense. See, one of the most important feature, if you read any forensic audit report or the way in which it comes into any newspaper, is that when you read it, one of the most common things that even I think, or I'm sure everyone when while reading things, अरे ये this is obvious, ये तो वैसे भी find out करना चाहिए था. Now that is typically what happens while effectively reading any forensic audit report, but it is not so obvious that that is how it would have been fit within the whole set of financial statements. So I think it is quite apparent if you read it, but it may not be so apparent when you're actually trying to detect it. So which are the various steps to be undertaken while actually undertaking a forensic audit? So I think first is we need to understand the case background. That is, why has the situation reached a forensic audit stage? See, you are appointed by somebody to undertake a forensic audit. So that means there is some background because of which you are today in the picture. So you can't just directly jump into the assignment and start a forensic audit. You need to very, very clearly understand what is it that has happened, what is the allegation, why are you there in the first place, and what is it that your client really wants. So I think writing down the allegation is also clear. And when I say allegation, it could mean the FIR if it is a registered case, if you're doing it for an investigative agency, or it could mean if you have a private client, it could mean what is it that the client actually thinks has happened. So writing down that allegation is important. Understanding the end result expected by the client. Now, this is very important. In an Indian context, it is many a times possible that, for example, if an employee has done something which is not correct while being in employment, now you get access to the laptop, you might get access to the mobile, you might get access to the emails, and based on the financial data, maybe certain other data available at your disposal, you are able to find out that the employee has actually committed a fraud. 9 out of 10 cases, what would happen is that the employer will call the employee, put all that evidence in front of the employee and say कि boss ये देखो इतना तुमने fraud किया है, ये सब evidence मेरे पास है, क्या करना है? Most cases the employee would say साहब मैंने आपका 30 लाख 40 लाख 50 whatever is the amount इतना नुकसान किया है, I'll pay you the amount, allow me to resign, I'll get away. And in many cases that is exactly what happens. But in certain cases, but in case, for example, if you're doing an assignment for a bank, or if you're doing an assignment for an investigative agency like the CBI or a anti-corruption bureau or the EOW, in that cases they can't say this. So because of which the evidence that you gather has to be so strong that if tomorrow even if that same person says ki okay maine kiya hi nahi, still the evidence is equally strong to be able to stand the test of law. So what I'm trying to say is that many a times when we do our work, something for us as chartered accountants might be commercially obvious, but whatever is commercially obvious may not be legally obvious in a court of law. And that's how we need to understand the end result which is expected by the client, because that kind of evidence we need to keep on building while actually undertaking the forensic audit. Basic understanding of the target entity or people, reading all the relevant laws, rules, and processes, because many a times if it is for a private party, the internal processes also makes a big difference in terms of deciding whether it is a fraud or not. Naturally, creating an hypothesis, because after you have got a complete sense of the picture, what is it that you actually the employee or that particular fraudster would have done is what you need to create a hypothesis. And then obtaining all the necessary information, which could involve at the client location or remotely, call email, data backup, sometimes even like I said, the mobile phones imaging, which is undertaken. Next stage is actually the forensic audit stage, where you test the hypothesis, where you do various analysis, which could be a mix of analytical and substantive checks. You could also be doing certain search words on hard disks, mobile phones, or emails. See, what I'm trying to say here is that while doing a forensic audit, there is no one standard methodology. Why? Because it is not like an audit where you will say, okay, you take cash and bank, do these 5 steps. Then you will take loans advances, do these 3 steps. That cannot happen that way, because every time your hypothesis is different. So for example, if you hypothesize that if particular movement outside a country has happened in terms of funds, let us try and identify, is there only a set of 5 parties which actually have been funneling the entire amount? Then you can go and test check to see whether that is happening or not. So you test, you create a hypothesis, and then you go and check if something like that has happened or not. So essentially it is about focus rather than completeness. So in a statutory audit, you would ensure that all areas are looked at. In a forensic audit, it is very much possible that you look at all areas and you end up getting nothing, because you are not able to think beyond what is actually presented to you. Like I said, substance over form is most important, because in most cases in forensic audit, it is very much possible that on the face of it, things look perfectly fine, but in reality, the substance is completely different. Next is about gathering evidence, and last is about writing the report. Now, evidence, as far as evidence is concerned, I think it's a huge field by itself. And typically, as chartered accountants, I strongly believe we need to very closely read the Indian Evidence Act. Now, something as obvious, I spoke about what could be commercially obvious could be very different from what is legally obvious. I am Sushrut Mukund Chitade. So in a particular case, you might find that a particular director is say Mukund Chitade. So as chartered accountants, we say, "Arey, perfect. Chalo, Sushrut Mukund Chitle hai, wo Mukund Chitle, mil gaya connection." Now that is commercially obvious. Sometimes it could be true, but I have faced it myself. In one of the cases which I was doing with the EOW, they say it is all fine. You are Sushrut Mukund Chitle. The person who is a director is Mukund Chitle. Now, how do you prove that he is related to Sushrut Mukund Chitle? So things which are actually very obvious to us from a commercial, or when I say commercial, I mean from a very common sense perspective. In a court of law, you need to actually prove the connection between those two parties. And accordingly, evidence to that extent has to be gathered to say whether Sushrut Mukund Chitle has a particular PAN number, whether the other person who is there has a particular PAN number. Is there any evidence on record to show that they are related to each other? So just having common names or common addresses, common emails by itself doesn't mean that you have got the evidence to say that the two parties are connected. So I think that's something which what I'll highlight. As far as report writing is concerned, I think just for the sake of it, because we are covering it in this context, your report has to be something which is again useful to the client. So, I mean, these are only maybe a sample contents as far as the forensic audit report is concerned. But most importantly, you need to have an introduction and background. You need to also speak about the methodology, about how exactly have you gone about doing your work. I would prefer that you typically should have an executive summary, which is the summary of observations, which is followed by a detailed observation, because sometimes the report can go on to 100 pages. And many a times, if you are giving it to any organization, the senior people within the organization will never have time to go through 100 pages. So there is always a better idea to give an executive summary so that maybe 4 pages, 5 pages can be read and the gist of it can be obtained. There should also be a recommendation. I mean, you are appointed as a forensic auditor based on a particular purpose. So to the extent possible, there should be a recommendation as far as the client is concerned. Coming to the last section of what I'm going to speak about is certain kind of case studies or bank frauds or other kind of frauds that I have personally encountered. And these are sort of case studies, or I would say frauds that maybe I can say I have helped uncover. So this was a particular assignment which we undertook for a bank. This was again a loan which a bank had given to a listed company, and the company went into an NPA. And that is where we were brought in by the public sector bank to undertake a forensic audit. So there was this A Limited, which was the borrower, which on a particular date had paid almost 60 crores as an advance to a particular vendor, which was B Limited. Now this B Limited was actually controlled by A Limited. And when I say controlled, it was again the same thing, that it had a common address as A Limited, or it had a common email, or one of the employees of A Limited, who was a very close person of the promoter, was also shown as a director in B Limited. On the same day, 60 crores was paid to another C Limited, which was again like an undisclosed related party. And again on the same date, 60 crores was paid to D Limited, which was a disclosed related party. And then 60 crores came in back as accounted as unsecured loan from promoters. So this entire transaction of A Limited to B Limited to C Limited to D Limited and back to A Limited, it had actually happened on the same date. And in the books of accounts, naturally, this leg or was also disclosed at the end of the year as a loan given by D Limited to A Limited. Now, it was A Limited's funds which had actually been round tripped and brought into the same business as promoters' contribution. Because typically for any bank loan, the bank would insist maybe a 20 or 30% promoter contribution. And accordingly, 60 crores had in this way, which was A Limited's money itself, had come back as a promoter contribution. Now, thankfully, we were able to identify this. And so you can imagine against this 60 crores, the bank immediately almost gave in 200, 250 crores towards the promoter, sorry, 150 crores towards their contribution as a part of the overall project, which was later on obviously siphoned out and became an NP. Then there was this another thing where A Limited was selling 60% of the total sales to only related parties, were disclosed related parties, and also purchasing 60% from related parties. Now, the methodology, now again, like I said, this by itself you cannot call a fraud because you are purchasing, selling 60% of your total material to related parties, you are disclosing it. You are purchasing 60% from different parties, not the same parties. Uh, you are also disclosing it. But the key part was that these entries were being knocked off without any payment of cash. So it was as if you are passing an entry saying creditors account debit to debtors account. So there was no fund movement at all. And that was a very clear giveaway that this entire thing was being done to only jack up both revenues as well as cost, debtors and creditors, and to avail and maintain a particular drawing power as far as the business was concerned. The third situation was again where A Limited as a borrower was paying money under LC to B Limited, which was again an undisclosed and non-operating related party, which was related but not disclosed as related. So there was money which was transferred under LC, but there was no purchase in the books of accounts. Now, typically this as a forensic auditor, or I would say as a bank auditor also, non-funded facilities is where as a bank auditor, one has to be also very careful. As a forensic auditor, so it is obvious, but as a forensic auditor, sometimes I say the risk is less because you typically come in after the non-funded component has also become funded. That is, it is also devolved or it has also been liquidated. That is typically when a forensic auditor comes into the picture. But in this particular case, there was no purchase at all, but money was being paid. In fact, this was such an interesting case that the nature of business of A Limited was they were into sale of electronic products. But this particular transaction was for purchase of rice. Now, when we asked even the promoter or we asked in fact, the bank official that how did you sanction or how did you allow LC documentation and funding against a LC, or if how did you issue a LC when you realize that the purchase was for rice? Now, actually, there was some problem within the bank at that point of time. But I think as a forensic auditor or even as a bank branch auditor, sometimes you have to be very careful. And again, going back to the concept of whether you understand the business properly or not, what is the actual nature of business and what is it that you are actually funding for? Then there was this particular A Limited, which was selling at 2000 per unit to a disclosed party, and the same unit was being, and the same product was actually being purchased at 3000. So this is a very clear and a very, I would say, simple method of siphoning money from the bank, because for every unit, essentially 1000 rupees was going out of A Limited fund to B Limited, which was a disclosed related party. And on the face of it, nobody could have a problem because there was a trade transaction, there was actual movement of products. But what was happening was that effectively for every transaction, 1000 rupees were going out of the system. Now this from an IBC perspective could also be important, because this is typically where you are doing a extortionate or undervalued transaction and moving away funds before the date of that particular CIRP or that insolvency date. Then one of the most interesting assignments, but I think which is where we were doing it on behalf of the government agency, and because of which we could vote this. And this was an assignment which we did 2 years back, but it pertained to a period which was prior to 2014. Now, this is where there was an A Limited in which B, C, and D, they had invested in equity shares. And this was before the 2014 amendment came in the Income Tax Act with respect to issue of shares at a premium, because prior to that, if you were issuing shares at a premium, it was not taxable in the hands of the company. So it is the case which pertained prior to 2014. Now this B, C, and D Limited were getting money from another partnership firm against some business payments, which was getting some money from certain layers of proprietorships. So G, H, and I were proprietorships, and which in turn were again getting money from all these proprietorships at layer 1, in which cash was being deposited. Now, this was a classic textbook example of money laundering, where cash and every day in each of these proprietorships was being invested, or I would say was deposited. For example, a bank account was created in the name of, say, J proprietor. There was a KYC which pertained to a person, say, in Goa, but the bank somehow allowed it a bank account to be opened in Calcutta. In case of J proprietor, money was deposited, bank account opened, for example, in the month of May. Every day, amount of say 4,80,000 deposited, because above 5 lakhs, a CTR has to be generated and given to the FIU. So amount of 4,80,000 deposited every day. Similarly, a lot of such accounts created. At the end of before March, somewhere in February, the entire money, or on the same day, I mean, the money was actually never accumulated. On the same day, the money was also from J, it used to go to G, and G to the EF, and then again to B, C, and D. So this used to be a very regular transaction, so that at the end of the year, J proprietor did not have a bank account. The bank account was also closed. So it was opened after the beginning of the year. Before the end of the year, the bank account was closed. While it had a PAN, there was no income tax return which was ever filed. There was no books of accounts naturally, and there was no CTR. And I think this is how a lot of cash, and you can imagine on a daily basis, if 4,80,000 rupees was deposited in one account, and so many, and this is only a illustration that I'm giving, but there were so many accounts and a huge chunk of money which actually came up to B, C, and D using these kind of methods. Now, finally, it was, I mean, it was a very different case here. And again, I mean, as a forensic auditor, we were able to link all of this because we were working on behalf of an investigative agency. Because in India, I think we need to all remember that if you're working on behalf of, say, a CBI or a ED, if you ask for a bank statement, you might get it by evening. If you're using, maybe working on behalf of a state government agency, it might take some time. But that's all. I mean, these are agencies which have legal powers to get bank statements of anyone if they are under investigation. But if you're working for a bank, even sometimes there is a huge problem of getting bank statements even from the consortium bankers. Forget other banks, and other banks will never give you. So, I mean, this kind of level of depth of analysis is possible many a times only when you're working for an agency which can actually give you the data that you require. So I think that was just like a information, because what happens many a times is it's probably claimed that, okay, the forensic auditor could not get that information or could not really find out anything. But to a large extent, that's a problem, because many cases, the information is essentially, most critical information is bank statements, which if you get, you can analyze, but if you can't get, you cannot analyze. Ponzi scheme typically, I mean, I need not really explain this, but customers would invest scheme in a Ponzi pool from which commission is paid to agents, which would again reinvest to build confidence into the system, which is paid to the initial customers, based on which new customers keep on joining. And that is how the money is essentially siphoned out. So maybe to conclude, last 3-4 things before, in a way, maybe I would conclude and we can have question answers. Is as far as forensic audits are concerned, what are the typical red flags to look out for? First is there any industry performance? I mean, essentially any beyond industry performance when the rest of industry has suffered a slowdown? See, any industry that anyone can think of or any business typically goes through a cycle, be it sugar, be it rice, be it any kind of grains. There is a particular business cycle. And typically any industry or any business which says that the cycle is completely different for one business or for one company, it cannot really happen. So whether that company fits within the broader business cycle as far as that particular industry, we cannot be experts in all of this, but we need to broadly read enough to be able to understand what stage is that particular industry going through. And I think that's something which is definitely a very big red flag if a particular company keeps on showing beyond industry performance when the rest of the industry has suffered a slowdown. Suppose, for example, in COVID, if a particular hotel says that they have been doing absolutely huge business for the last 3 years without giving any specific reason, I think that's definitely a red flag, because we all know that in COVID, there was hardly any travel, and accordingly, most hotels have had a very difficult time unless they had converted themselves into like a COVID type of a hospital. Second is consistent growth in profit before tax while operating cash flows continue to be negative. Now, one thing which I definitely do as a part of any forensic audit or any audit also for that matter is to compare the operating cash flow over the last 4-5 years with the EBITDA or the PBT over the last 4-5 years. Because I think over a period of time, these two numbers essentially have to match. When will they not match? They will not match when the number of accounting estimates or the number of intangibles in your profit and loss account are very high. Now, if you keep on having a lot of accounting estimates, for example, if you have a lot of debtors which do not get collected over a period of time, that is when your numbers will keep on having a lot of variance. And I think that is where there could definitely be a red flag. Very high level of transactions with related parties is a definite red flag. More so if the reason for having a related party doing that kind of a transaction is not very clearly brought out to you. So, I mean, having a lot of related parties by itself is not a problem, but there should be a for each transaction with a related party, there has to be a commercial logic to it. If the client or the bank or the typical company is not able to explain why this kind of a transaction has been undertaken, I would say that that is a red flag. Then transactions which parties which do not appear to be related to nature of business. Like I said, I am into manufacturing of electronic components. I am manufacturing sensors, but against LC, I am purchasing rice. Now that should be something which should set an alarm bell in your mind as a forensic auditor or even as a bank branch auditor. Why would a company which is in the nature of, which is doing the business of electronics, purchasing rice? Now forget now, because the typical thing that you would always be shown is the memorandum of association, which for any company in anywhere in the country, practically they can do anything that they can think of. So I think that is not a reason to justify whether they can purchase rice or not, because that's something which they are legally entitled to do, but doesn't mean that that's something for which the bank should be funding them. High level of bad debts and write-offs, and I think correspondent or consequent to such bad debts or write-offs, if a very high portion of collection actually comes back, that is definitely a very big red flag. Then knocking off of debtors against different creditors, again a very big problem, which as a forensic auditor you will be able to see. Lastly, all compliances are impeccable. Now, I have seen a particular case where the level of compliance was so impeccable that that is what created a doubt in my mind. I mean, it was so impeccable that there was no interest even on advance tax at the end of the year. So no 234 ABC also, not a single rupee. Now, who is able to plan to that extent? I mean, how is it possible that you don't end up, that you even your advance tax computations are perfect and then there is no refund also? Now, unless you have planned everything at the beginning of the year, including what profit you are going to earn, and this in a practical, in a real business, that's never possible. So I think all compliances being absolutely impeccable is also sometimes a very, again, like I said, it's not a fraud, but it is an indication that there is a red flag. You need to really look into it in more detail. Frequent changes in accounting and compliance related stuff. And lastly, which is most obvious, is if the promoter lifestyle does not appear in sync with the financial performance of business. So business is not performing at all, but the promoter lifestyle is something which doesn't probably fit in, as far as does not logically fit in with the financial performance of business. I think that is again a red flag. Definitely as a forensic auditor, I would say sometimes even as a statutory auditor. Last two slides, which I've purposely inserted because I think from a bank audit perspective, which I thought, because all this many a times the feeling is ki, okay, all this was good, but how does it affect me from an actual work perspective? And like I said, I think these are important things to learn, especially forensic audit, because many of these techniques, we like it or not, these are things which are actually going to be incorporated as a part of even statutory audit or internal audit in the next coming years. We initially we did not have it, but now as a part of fraud, I mean, we, especially if you do cooperative audits, you are now supposed to even report frauds. You are supposed to file FIRs. At the same point of time, under company law also, you are now, if you are doing a company audit, if there is a fraud, you are supposed to report it. So I think these kind of things, essentially over the going future, forensic audit or the techniques are going to be very critical in every aspect. And like I said, there are certain absolute commonsensical things. So from a bank audit perspective, certain other kind of frauds that I have seen, encountered personally, only that I'm talking about here, and which could also be important and which have an implication when you are doing bank audit or bank branch audit or sometimes concurrent audit, is where new bank loans were used to service existing debt service obligation. Now, this could typically happen in case of infrastructure SPVs, where there is a delay, and because of the delay, there is no income which is earned. but the project cost keeps on increasing, because of which you need to take more loans from the banks. And then essentially some part of the new loans is actually just used to repay the earlier loans. Now, this kind of evergreening, as a bank auditor, you need to be very careful whether this fits in within the relevant RBI guidelines, else you need to really flag it off immediately. Understanding the business, company's working capital cycle didn't seem to require any working capital finance. Now, we had done a forensic audit for a company where the company was paying the creditors in reality only when it was recovering money from debtors. And that was the policy, which was the written policy, which was the written agreement with the creditors. In which case, one of the most important questions which came to our mind was, then in that case, what was working capital required for? Because if you are going to pay your creditors only when you recover money from debtors and there is no inventory in the business, what do you really require working capital for? Because then it's like being a CA firm, right? I mean, though we have to pay our creditors before our debtors pay, but I think fundamentally in that case, who gives us working capital finance against a DP in that sense? So I think this is again understanding the business even while doing bank branch audit or concurrent audit. This aspect one needs to look at. You have the new caro coming in, and which is going to be a huge, I would not say a challenge, but which is going to be a huge area of work when you are doing bank audits, is where we are now expected as auditors, statutory auditors, to report whether there is a mismatch in amounts as per stock and book statements submitted to the bank versus what is appearing in the books of accounts, which is going to be a very big area. I think I need not emphasize it again and again, but we all know in many cases, typically from a bank audit perspective, or even in case of our clients, we know that the stock and debtor statements are submitted many a times for 29th March and not for 31st March. They are submitted for 29th December, not for 31st December. So I think fundamentally going forward, whatever date they are submitted, this is what we need to report. Now, as auditors, this obviously is a very important area which we need to even communicate to our clients, or else we need to report it. But when you are doing a bank branch audit or a concurrent audit, at the point of time of assessment, or at the point of time of determining whether the bank has given an appropriate sanction or not, this will become a very important factor, because now you will have an auditor along auditors report along with the financial statements saying whether the financial statements agree with the information which has been submitted to the bank at different points of time. So this is a very important point, especially from this year onwards, that one can do. Then loans and advances have been given to companies which are already struck off from MCA. So we have observed certain cases, because what happens is in case of MCA, typically MCA nowadays insists that you file a certificate that the bank account has been closed. But still sometimes if somebody does not gives the improper certificate based on which the company no longer is seen on the ROC website, that is, you will see that the company is struck off, but transactions with such company just continues. And it is a very dangerous thing, because that way there is no ROC compliance required because it is struck off. But at the bank level, the company might just keep on having transactions. And for there as an auditor or as a bank branch auditor, for wherever you have a doubt, it is now easy to go and check on the MCA website whether that particular company is actually there or whether the name has been struck off. Then banking is carried out through banks other than consortium members, which is a big problem. Fundamentally, if something like this is happening, in my view, that itself is a red flag, because forget that it is not allowed. Most importantly, if a company is actually doing banking with through banks other than consortium bankers, it means that they want to hide something. And accordingly, I think that's something that one has to be careful about. One of the cases that we did a forensic audit on, there was hardly any data available. But then we realized that there was a tax raid on the company. And in one of the affidavits filed by the owner at the time of the raid, they had agreed that almost 30% of the sales of the company were fake. So that affidavit was later on, we tried to get it from public records. And I think that would make a big difference in terms of our analysis and our report. Lastly, again, a considerable part, which is also very critical in forensic audit, but one has to be very careful while doing a bank audit, is sometimes the loan is processed to a party considering it is a part of a group, but the party is never technically a part of the group. So the way in which the entire documentation of the loan file is built up by somebody, I mean, in a bank, typically the flavor that the first officer gives in terms of writing the proposal, the same flavor effectively carries right up to the end till the time it is sanctioned. So the flavor that was given was the entire group is so strong, everything is this group is big, that group is big. And somewhere the entire ratio analysis for the group as a whole was given to justify whether that particular loan to the party is to be given or not. But nowhere is the party's connection with the group actually established. So it is only said is it is a part of so and so group, part of so and so group. But how is the party related to the main company in that group was not established at all. And typically what happened is later on when the loan was given and when the loan was not repaid, at which point of time the main party just distanced itself saying we have nothing to do with this party, and at which point of time the bank was in a big mess because they had no means of really going against that particular group to recover it, because technically on paper the party was never a part of the entire group. Again, last part, again, the company undertaking job work, but stock received included in drawing power. Understanding the business becomes critical. If you have a particular company which is undertaking job work, then you are recovering the entire money, or you're taking the material from somebody only doing job work and returning it back. In which case, typically the stock is not even yours. So how do you include that as a part of your drawing power? Now, these are questions which should arise in the minds of not only a forensic auditor, but also in the mind of any person doing the bank branch audit and while checking the drawing power limits. Based on the discussion till now, only 3 or 4 highlights in terms of what one can do while actually doing a bank audit from a forensic angle. I would say definitely one should undertake a general financial statement analysis of the borrower to ascertain whether the funds borrowed from the bank have been deployed properly or not. Now, how to do that is typically if you have a loan which is in the nature of a term loan, you can do some basic financial statement analysis for 2-3 years to see whether, for example, if your fixed assets have they grown by that value. If you have given a term loan of say 10 crores rupees, check whether if it is for machinery, whether your plant and machinery amount has actually increased by 10 crores, or whether the plant and machinery amount has increased by only 4 crores and 6 crores seems to be used only for some general corporate purposes. So I think these are basic financial statement analysis based on the proposal to find out whether the amounts have been really deployed for. Working capital ratio analysis to assess whether the business actually needs any working capital. I think this if one is able to do based on a basic working capital analysis, just debtors upon sales, creditors upon purchases, and cost of material consumed upon inventory will definitely give you the debtors turnover period, creditors payment period, and your inventory holding period. Now your debtors plus inventory minus creditors is essentially your working capital number of days. Now, if you have working capital days funding required for 60 days, and you have total 360 days in a year, so that per se on a very loose terms means that you need 20% of sales as working capital funding. Now, if your working capital funding you have assessed and if you have asked for as 40%, that means that is the first question, why does the business require that? So I think these are basic, and this I am talking on the face of the balance sheet. I'm not really going, because as bank auditors, you will not have access to the trial balance or the books of accounts of the company. So from that perspective, I'm saying these are the basic analysis that you can do. Then for continuing accounts, I would say for some places where you feel that way, you can ask the bank to procure the trial balances from the borrower. Because if you just get even the detailed trial balance, just by the name of it, you will be able to find out if there is any non-consortium lender in the list. So I think that's a very basic analysis that you can do. Check if there are any searches carried out by the income tax on the borrower. So if it is again a big borrower that you are looking at as a part of your concurrent audit or bank branch audit, look at just based on Google searches or certain other searches to see if there is an income tax rate. Based on the income tax rate, you will also be able to find out if there is any kind of disclosure or if there is any case, what is the kind of affidavit that has been filed by the particular person. That will also throw a lot of light on what is the next step that you need. And mostly in case of non-funded facilities, I think in certain banks, there is a revolving facility where out of the total facility, the non-funded portion is not specified very clearly. So if there is a total facility for 10 crores, It could be a mix of funded and non-funded, which I think is many a times very, very dangerous and very, I mean, as a statute, I mean, as a bank branch auditor or the auditor, one has to be very careful about such kind of cases. And especially whether those non-funded facilities are being used for the normal activities of the business. So I think that was broadly my presentation on fraud, forensic audit, what you need to do, and maybe also giving some flavor of what one can do as a part of actually doing maybe a bank audit or a concurrent audit. So that was from my side. If there are any questions or any views, would be happy to take them.
Anybody has any question, please ask. No questions?
No question.
No question.
I think everyone must be checking their respective audit reports, what they have done till date. And there must have been things which should have been reported by the chartered accountants. They are now realizing their mistakes or the things which should be corrected.
Over to MC.
I think Vinod sir said correctly. Everyone is checking their reports. So it was a wonderful session, sir. It was not covering only forensic audit, but for general audits we are carrying out day to day. It was very helpful for that also, and we are really thankful for conducting this session. I would really say that whoever missed this session, they are missing a lot of lessons learnings from this session. So they are their loss. We have gained, we should say. Further, I would request CA Vinod Salunke sir, Secretary of IC, Latur branch of WISC of ICAI, to propose a vote of thanks.
Good evening, everyone. Good evening, all the participants. Actually, मराठीमध्ये आपला एक मन आहे की आपल्या माणसाचं काय आभार व्यक्त करायचं. आपल्या लातूर ब्रांचचे नॉमिनी मेंबर आहे. चितळे सर इज द नॉमिनी मेंबर ऑफ आवर लातूर ब्रांच, and since last 1 year we are getting directly in touch with him for any kind of inquiries, whether it is related with the administration or any kind of anything. So irrespective of the fact that the knowledge which you have shared with all of us, the guidance which you have made in the last 2 hours or maybe 70 minutes, I think that is really valuable thing which you have got. One thing which I want to clear to everyone is that I think this session is available on the YouTube, so you can later on you can check the session. And thank you very much, sir. Thank you for such a valuable guidance to all of us. And I request that we will be definitely meeting shortly in person, and we will have a physical session at Latur. Thank you, everyone. Thank you, all the participants. For conduct, and on behalf of Latur branch, thank all the participants, and we look forward to conduct these kind of sessions in future also. Thank you very much.
Thank you so much. Thank you.
Thank you so much, sir. Further, with the permission of dignitaries, I would declare